Hi guys, and welcome to another short video. This time I'm looking at a cross pair I don't normally look at, Australian dollar versus New Zealand dollar. I saw a setup on this that was structurally sound, and therefore I'm currently short. I wanted to go through that and detail the trade. This is the 8th of July, so 2015, and I'm expecting this to give a decent move, and it's already moved a good amount from the entry point, and I'm going to go through where the potential turn, exit, and what I see happening in this. So this is a good lesson for regardless of whatever currency pair or instrument you trade, because the saying goes, a chart is a chart. You know, this could be a chart of euro dollar, or of euro yen, pound dollar, whatever it is. It just happens to be Australian dollar versus New Zealand dollar, which is a very exotic pair, I have to say. And two very similar currency pairs, because they two similar currencies because the economies do a lot of trade together. Australian dollar, Australian economy, New Zealand economy, very close together. So, but nonetheless, it does show that you can have good moves even off similar currencies. So another similar currency would be euro pound, among others. And you can see decent moves in these, Australian dollar, Canadian dollar, so, commodity currencies. So don't be afraid to trade exotic cross pairs, exotic currencies, as long as your spread is decent, as long as it's low enough to trade that you're not getting charged extortionately high spreads, and as long as you've got a good overall perspective of what's happening and you've got a great technical picture, then I'd say it's they're perfectly fine to trade. Although majority of our trading is done on the major pairs, so I'd say about 70% of my trading is done on euro dollar, pound dollar, and the other 30% is on the others. But however, when it comes to, say, this is more of a swing trade. When it comes to swing trading opportunities, you need to look at more currency pairs in order to give you sufficient opportunities. On our bank manipulation course, we tend to focus on intraday approaches. We know everything begins and finishes within the day itself, and therefore we focus on the major pairs. Pound dollar, euro yen, and a few cross pairs, but those being the major ones: pound dollar, euro pound, and euro yen. For the simple reason that there's a lot of manipulation that's done on those currencies, on those currencies, and they're highly liquid. They are the most liquid pairs, and therefore we get sufficient opportunities to just focus on those on a regular basis. If you're going to swing trade, where you're looking to be in positions for days or weeks at a time, then you really want to look at more currency pairs so that you have more opportunities and therefore more trades. All right. So without laboring a point, the main thing is trade what you see, and a chart is a chart, right? So here we've got Australian dollar versus New Zealand dollar. This setup took place on a weekly, and I'll show you how I executed it afterwards. The main thing is that several components came together. There are a number of confluent factors, and I'll go through what they are. First thing we notice is we've got a dominant trend here. Okay, we've had a strong trend in play for a while. I'm a trend-based trader. I think it's easier to make money through the trend, like I've highlighted a few times before. So whenever there's a strong trend in play, my bias is always to go in the direction of the trend. So in this case, I'm looking for shorting opportunities. And what's happened recently is we've sold off quite a lot over a few years, and we've had this pretty aggressive rally with strong momentum behind it. Now, if I highlight this, at this point, what we're asking is this the beginning of a new trend when you look at the strength with which the price has moved up, or is this just a retracement before we get the move back down? And as the picture unfolds, we can, tick it off as we go along to see what the stronger picture is going to be. At this in this case here, what I was looking for was a shorting opportunity. So looking at this, I'm looking for a sudden opportunity off an area of confluence. Now we have several things coming together here. We can see we've got a support level, resistance level. So those of you who trade support resistance levels, here's a level here. It's a buying and selling zone, or demand supply. This is a time where buyers came in to push it up, failed, then price broke through these lows. So we had a support level that broke, came back up, retested as resistance 1, 2, 3 times, and then sold off. So since we're coming back to that point, I was looking for a selling opportunity from this place here, purely because it was the place where we last sold off from. So unless price pushes through this aggressively, then I have no reason to expect price not to turn from here. In the same way that sellers turned up here, I'm expecting them to turn up here as well. All right, so that was the first factor, looking for a selling opportunity in a downtrend off a level of resistance. The second thing I looked at is that looking at the daily chart, by drilling down to the daily chart, and this is what the area looks like. You can see this is where sellers came in a few times, so the zone we saw in a weekly, and you can see first time here sellers came in, failed, and price pushed aggressively beyond that. So it's quite imaginable, you know, here that we could have taken a losing trade, and if you did, that's part and parcel of trading. Sometimes you're going to have losers. So we came into a selling area where we expect sellers to turn up. They turned up, pushed price down, but then it rallied back up. Fine. And then we get this momentous move after that. Most people would have caught this, but they wouldn't have caught this, because imagine the price has gone up, your stops would have been taken out completely. And just think about it for a second. If you were short the market here, where would your stop loss typically be? Your stop loss is going to be just above the market here, isn't it? So what's happened here is market makers or institutions, they've pushed price up to trigger those stops, to get a lot of these guys stopped out, and then reverse the trade afterwards. Now, although price has moved up, this could have been 100, 150 pips. That's still feasible. You know, there are market makers that will push price 100, even 200 pips if necessary, in order to absorb all the orders before they turn price around. And why does that happen? Because of liquidity pools. Now, the reason why we have these resistance levels is because you've got orders here, you've got liquidity pools here. So what happens when, you know, anyone who's sold here is going to put a stop loss up here. If you're selling, the opposite of your exit is to exit the trade, you're going to need to buy. So when you have price that pushes up sufficiently above this level, it triggers a lot of those buy orders, which is a combination of people who are trading the breakout from here to go long, and also people who've had stop losses above here. So those combination of orders haven't been collected. Once they've been absorbed, then smart money can do what they want to do, which is push price back down. All right. Although this happens a lot more on the major currency pairs, it does still happen on the cross rates. So we had this on a daily chart. What actually took place is price pushed up, got stopped out here. From a structural point of view, going back to the weekly, there were a couple of things that came together. We had this strong area here in a downtrend, number one. Number two, we also had, if you use indicators, here are a couple of momentum indicators. This is RSI and stochastic, and they're both in the overbought category, right? If we look at that, they're both overbought here and here. So that's telling us that that's due for a turn, or there's a higher chance of it turning around. Doesn't mean it's necessarily going to happen absolutely every single time, but when you combine it with other factors, it strengthens the argument for taking a short. So that was overbought. Plus, also we had price on a weekly that failed to close above this high. So although we had a penetration of this level, price closed below these highs. To me, that's a sign of weakness. So putting that together, I'm thinking, okay, I'm ready to look for a certain opportunity. On a daily chart, what we also had is we had this beautiful AB equals CD pattern here. Perfect completion right there, 1-to-1. Bang, bang, bang. So that adds further confluence that we've got sellers that are looking to step in around here. Putting all of that together, we've also got divergence towards the highs here. At the top, those of you who trade divergence, you can see we've got divergence here. That gives that as a final icing on the cherry, and therefore we're ready to go, right? So I was looking for short an opportunity from that point onwards. There are numerous ways of getting into the trade. There are numerous techniques you can use to enter. Some people would take, break of support level, or other people will wait for price to go above a certain point. In this case, let's say if you had maybe like a trend line sort of drawn like that. Otherwise, this isn't the best one. Wait for a break of that. Um, there are numerous ways of getting into the trade. A simple one that I used was just simply, you can see a support level here, there. On a lower time frame, I've used a 1 hour chart. In this case, it could be a 4 hour chart. Doesn't make much difference. You're looking for a nice level of support here. Then we had a break below. That was an entry opportunity. The other opportunity would have been retracement to previous highs around here. Here was also a selling zone here. That's an early zone, a little bit aggressive. This is a bit more conservative. You could have waited for the pullback. So there are numerous entry techniques. The most important thing for me is identifying a high probability selling zone, which that was the case, right? So we identified that. We're short the market, having entered just below this low here, and this is where we are at this moment in time. Now, from a higher time frame perspective, if I look at the monthly chart, we have, from an Elliott wave point of view, we've got 1, 2, 3, 4. Looks like we finished a 5-wave count. So this could be a wave 1 of a wave 2, wave 3 retracement, correction. As a result, there are 1 or 2 scenarios that can unfold here. Either we can get a move, I'd say the expected scenario would be for it to move down sort of halfway point here and then pick up from, when you look at the Elliott wave count here. I'd be very surprised if it comes all the way down to the lows. The safest way to trade it is going to be to look for confluence of a potential exit point, and the confluence we have here, bear in mind that I am looking at this as potential wave 1 of a 3-wave move up. If I drill to the weekly chart, we can see this is what it looks like here. So we've had that move up, pull back. So I'm using a Fibonacci retracement tool from here to here to look at an overlap between where one of the levels falls in line with a level of resistance or support. From here to here, we've got all the retracements here, and if I drill to a lower time frame, I can see that we have an overlap between a 382 and a previous double top, previous high point here. So this is going to be my first profit target. This will be enough on this trade to get about an 8 to 1, 9 to 1. So it'll be about a 9 to 1 trade. At that stage, I'll take quite a bit off the table and leave a small amount to run in case it continues to go down further. However, looking at this, I'm also seeing that there could be a potential further upside. One of the guide indicators I'm going to look for is when the indicators go into the oversold category as being the final exit point. So I'll take some profits here and some where I get the final exit here, and looking at that as being a potential reversal point for a possible long. All right, the long could trigger sort of a zone around here. I'd have to see it at the time. There isn't an immediate thing that an immediate point that cries out, but nonetheless, since the focus is on the short, I'll finish that trade first before looking for a long opportunity. So that's Aussie New Zealand. I hope you got something out of that. To learn more, this is a combination of using market structure from the FX course as well as the Fibonacci course, but nonetheless, a lot of this is covered in our FX course, plus on the rest is covered on the mentorship also. Happy trading, and this is Isaac from Trade Simple, Trade Smart. Speak to you soon. Bye bye.